All right, what's going on YouTube and Discord family? Welcome back to another edition of Top Analysis with me, T. Hobbs. Today is June 15th, Sunday, June 15th, 2025, year of our Lord. And today is Father's Day. So, first and foremost, happy Father's Day to all the people, all the men out there that are doing their thing and, and really representing for their children out there. So, wanted to give a special shout out to the fathers out there. So that being said, let's get right into the charts. You already know what it is. We're going to be breaking down the Dow Jones, the S&P 500, the Nasdaq on the 3-month briefly, the monthly briefly, and then really getting into the weeds on the weekly, the daily, and the 4-hour. I'll break out those levels. We'll be breaking down each instrument individually. The video will be separated into chapters. So if you want to skip around and go to your specific instrument, get my analysis, and then move on, just make sure you hit the like button, aka tip the barber, and then we can move on from there. All right, let's get right into it with the Dow Jones on the 3-month chart. I've been seeing a lot of people talk about war, talk about protests, talk about all of this craziness. Listen, man, the market don't care about none of that, right? Market structure doesn't really factor in a lot. Does it scare some people? Sure, but all that does is bring a better price, right, for those that are following the trend. And right now the trend is up. Like, this is the 3-month chart right now. There's 15 days left in this 3-month chart. Can this thing reverse and go all the way back down here? Normally I'd be like, yeah, maybe. No, it's not. It's not going to reverse and drop down 8,000 points. That's not going to happen, right? In 15 days, it's not going to happen. If it does, it will be, I will eat those words, and it will be the worst dump in the history of the stock market. If we dump 8,000 points in 15 days, that's exactly what I expect us to be at war, or something catastrophic has happened in the market, right? Barring any of that from happening, okay, we're just going to read the current structure. What are we seeing? On the 3-month chart, we're seeing that buyers came in from this level. Again, this was a very key level. This was 2023 where everything started. The market bought. The buyers bought and defended. They defended back up through these levels. They got back above here. They even started to push back into January 2025 prices, up almost 20% from the dump, 25% from the dump. And you can see that the market came up here, failed, but we're still balancing out at the previous, inside of the previous month's candle. Therefore, what am I expecting? I'm expecting the market to continue to the upside at some point, right? Does that mean we can't get a pullback? Of course it doesn't, right? But it means that ultimately the direction is up. Let's go down to the monthly time frame, and you can see very, very similar price action going on here. People will say, well, Hobbs, what about this wick here? I'm like, yeah, well, what about the fact that there's 15 days and 4 hours left on that candle, right? So what I'm looking at is, if I take a Fibonacci retracement and I bring it up to the top of this candle, which is May 1st candle, we just bring it down, you can see that we're just tapping back into, so far, we dropped past the 70% mark, and we're trying to push back into the 50% mark, which is the monthly fib, or the 50% of the previous month's candle. That is a very, very good place to be buying, right? Especially since the previous month's low did not come anywhere near April's lows, right? So I don't expect the market to get below 40,710. I'm looking for the market to hold between 41,378 and 41,836. Somewhere in here is where I'm looking for the market to bounce, and just remember those levels, because as we come down to the 4-hour, you're going to see exactly why I'm anticipating price coming back there. All right, so let's drop down to the weekly time frame. We'll spend a little bit more time on that level. Looking at the weekly time frame, what do we have? Well, we had an aggressive sweep of liquidity, which we all understood was a sweep. It was a liquidation, great. But what did we do after that? If the market didn't have a day where it pumped up 12%, then maybe I'm not so bullish. If the market then didn't turn around and defend that day by, or that week, right? Defend that week by consecutive weeks, pushing the market up another 12%, then maybe I'm not so bullish. But unfortunately for you bears out there, that did happen, right? So we can't ignore that. So until the market gets back below, let's just say the current low, right, that's in control of this range, that would be this low right here, the weekly low of May 5th. Until the market breaks this low, everything above this is bullish, in my opinion, right? So the range that we're dealing with on the weekly is the high from March 2025 and the low from May the 5th. As you can see, we came up to the high and we slightly ran that high. It's important to note that we did get above that previous high because that tells me that price was being tested up here. Yeah, they came down aggressively, but we still traded up there. That tells me that there is interest up there, but the market may need to come down further to find more buyers. That's where that monthly fib is going to come in, that 41.8 and some change. It'll be like the low of this candle right here. But again, as we come down to the 4 hour, I'll break down those levels. Now, if you are a bear, you can be bearish where we are currently, right? Like I'm bearish on Monday, right? I'm bearish in having the market come back down to this level here, or maybe even down to here. I'm bearish unless we come out and we just gap up and go crazy. Then of course I'll turn back bullish. But ultimately, you can't really be a bear and hold positions comfortably until you see this low break, because that's when you'll know we're clearly out of this dealing range, right? This is the high, this is the low, right? This broke this high, so that's why this is a low. So now, if we're inside of this range, every time we come up here, you can cautiously look for shorts, because at some point we're going to break this. But the further we get to here, and even down to here, because on a more specific basis or a tighter range basis, this low right here, right? This candle right here on May 19th, 2025 is really setting the whole dealing range of this consolidation, right? That was the overall dealing range, but let's just talk the last 1, 2, 3, 4, 5 weeks. This doji candle has set the range for the next 5 weeks, right? That being said, well, what did we do at the high of it? Well, we came up here, we broke the range, right? So now when we come down, you want to see us hold the low. That's why I said I don't want to see price really get below 41,200, or definitely not below 40,820. But if we come down here, I expect us to start putting in higher lows and eventually breaking through the top side of this range and targeting these all-time highs within the next 15 days. There's a plethora of catalysts that can get us to that level, and we'll go through that when we get down to the news on the day. All right. So the candle that's got all the bears coming out ready to go crazy is this daily candle right here, right? First, we got the rejection on June 11th. We got the run of all of this liquidity, and we still got more liquidity to run. That's why I said I'm more so bearish to start the week, because we ran this low, we still got all of these lows here, and then potentially pushing into the CE of this candle here, right? So yeah, I'm bearish as well going into the week. And then we'll see what the Dow wants to do, because it is weaker than the other two instruments, but it did close all of these gaps, these inefficiencies in price. This gap here was closed. This gap here was closed. And you'll see when we move over to the NASDAQ and the S&P, they did not close these gaps. So I'm kind of leaning toward them selling down even further, but we'll see what happens. But like I said, so far so good. If you're a bear, I could remain bearish all the way until we sweep this low right here. So if we get down to May 23rd's low, once we break that, then I'm back to being a bull until the market proves to me that it can continue to sell down. So to start the week, I'm looking for bears to come down, take out these lows, and then for bulls to take back over. And then we start working up toward these highs. Remember, we do have FOMC this week on Wednesday, right? We have contract rollover this week. All of these are bullish catalysts potentially, especially considering the forecast for FOMC. The funds rate is just simply the previous forecast, 4.5%. So if we even get an inclination, right? If the Fed comes out and says that they were considering lowering rates at any point, this market's going to go ballistic. I can tell you that right now. It's going to go ballistic. All right, so let's drop down to the 4-hour time frame. Let's bring out our levels going into the week, and then we'll move on to some other instruments, and then we'll get you guys out of here after we go through the news and stuff. All right, so going over to the 4-hour time frame, this is my predictions for the week, how I expect price to be delivered. Again, it is just a hypothesis. I like to have fun with it, right? But at the same time, it's based off an educated guess, right? So we'll just see how that goes. Now, Monday or Tuesday usually puts in the higher, the low of the week. And if I want the market to remain bullish, I want to see the market trade down first. Well, I talked about these levels on the daily, weekly, and monthly and 3-month. I'm going to talk about them again on the 4-hour. That level, monthly fib. I want to see the market trade down to monthly fib at 41,850. I want to see the market tap into this level and then rally 3.74%. That's our weekly projection average over the last 6 weeks. Yeah, 6 weeks. Now, we have been we've been in consolidation over the last 2 or 3 weeks. So that number is going to be potentially or very low. Like the 3.74%, I think that's only like, I don't know, like 1,100 points or something like that on the Dow. This number at some point is going to get ran through, right? Like these numbers are going to get exceeded at some point because the VIX is starting to get stronger. So these numbers, these weekly numbers, averages are going to start to get larger and larger. So at some point, we're just going to blow past my projections. I'm fully anticipating that. But 3.74%, I'm looking for a high of 43,411, right? And then if we trade down even lower, we have this huge daily demand zone. Again, if you remember from the daily, the weekly, the monthly, and the 3 month, I was talking about this level right here. That's this long wick on May 23rd. That also is a daily demand zone, right? So from the daily demand zone, which sits at 41,477, maybe we trade straight down starting Monday, Tuesday, Wednesday, we're at this level. We hit the reversal button and go straight up. And then Thursday, we get the pullback. And then Friday, we just rally all the way back up. But from this level, I'm looking for 3.74%. Daily demand sits right inside of this 4-hour supply at 43,024 or 3.74%. If we're going to trade back to the downside, again, for all you bears out there, then I don't expect us to really go back up and retest this in efficiency. I expect us to leave it open until like Wednesday or Thursday, right? So what I'm looking for is I want to see us come back to the chessboard high, retest this area here, tap into about 42,464, and then rally or then dump all the way down to 3.66% at 40,906. This is another one of those days, if you ever watch my top-down analysis videos, where I talk about, hey, if we're down at these levels, monthly settlement is down here. If we're at this level on Wednesday, it's only going to make me more and more bullish, right? You know, we got FOMC. The market likes to dump, consolidate Tuesday, Wednesday, put in the low, and then we just go, right? So if that happens, I'm an all-day trader that day, right? So from the chessboard low, let's say we get a gap down, right? So we get a gap down from 42,088, which will make me extremely bullish on the week. Then we push down to 40,537 or 3.69%. Then I'm looking for the same thesis, rallying us all the way back up, right? Notice how my bearish plan is still leaning toward the bullish side, right? I'm only using the bearish plan to get to more upside. That's it, right? So I'm expecting a big dump, fine, but I'm not expecting the continuation. As long as this low right here stays intact or gets swept and stays intact, I'm going to continue to be bullish, all right? So those are my thoughts on the Dow Jones. If that's all you needed, then that's it for the Dow Jones. Let's move over to the S&P 500. All right, switching over to the S&P 500 now. We're looking at the monthly, but let's jump up to the 3-month chart first. So 3-month chart on the S&P and the NASDAQ are just absolutely insane, right? Like I was just talking about this before the video started, but this 3-month chart is, if you see anything but bullish activity on this chart, then I don't know what to tell you. If you're like, man, we're neutral or we're bearish, then you really need to go get some new glasses because this is clearly very, very bullish. The wick, the body, the top wick, everything about this is extremely bullish. And the fact that there's only 15 days left in the candle leads me to believe that eventually we're going to go for these all-time highs, right? So that there's no, I wouldn't say there's no doubt. I would just say that there's a high probability that we're looking to take that high. The monthly candle dropping down to that level, you get this more of the same. Aggressive bull, higher highs, higher lows, higher low, higher high. There's nothing here telling me to be a bear. So although I am bearish to start the week, I'm ultimately bullish on the week and the month. Again, major catalyst coming in this week, right? So yes, I just don't see the bearish case, right? Like, you know, maybe somebody could drop in the comments what their bearish case is, but I just don't see it, right? Weekly time frame, again, doji candle right about here, right? Turn on the magnet here. This doji candle on May 19th, right? We just put a line top and bottom. It created a dealing range, right? So you understand how dealing ranges work, right? The market's going to play around in this dealing range, trapping buyers and sellers, essentially consolidating, right? Over about 1, 2, 3, basically 4 weeks, right? We put in a bull flag and we consolidated. We broke the bull flag. Now we put in another doji candle at the top of trend. We'll probably trade back down to the lower ends of the dealing range. but not try to break this low. And if we do, that's even more bullish in my opinion, because we'll probably just be sweeping it to close this gap right here. So as long as we're holding this dealing range and we're basing above it, we could just gap right up from here, to be honest, right? Like, to be honest, we could literally on the S&P just gap straight back up from here because we're basing at the top of the dealing range. That's very, very bullish, right? So that's the weekly time frame. I mean, I hate to sound like a perma bull, but I'm not a perma bull. I'm just a perma structure follower, right? Like, if the market is telling me to be bullish, I'm going to be bullish. If the market's telling me to be bearish, I'm going to be bearish. Right now, I don't see a reason to be bearish. I just don't, right? Like, bearish for the first 2 days because we got to go put in the wick for the weekly candle, but I don't see the bearish concerns here. But anyway, let's just draw simple trend lines, right? Like, maybe the trend line will tell us something. Oh, market tried to get below the trend line on the daily. It failed, right? And if we drop this trend line down a little further, about right there, right? You can see that, we're just holding the trend. If we stretch it all the way down, right? We bring this down this way, you can just see that the market is just holding a perfect trend line. Eventually, we'll break this trend line. When we get to the other side of it, maybe I'll short it down to basically here. As long as the S&P stays above 57.53, or we can even come down and close this gap to 56.90. It's only going to make me more and more bullish, right? The only thing that concerns me for the bears or for the bulls is the fact that the S&P has this gap and this gap that it hasn't closed. What's my thesis on that? My thesis is that because of contract rollover, the market's just going to keep these gaps open, right? When the contract rolls over, then after everybody kind of switches over to the new contract, then maybe we get an aggressive sell-off after the announcement of rate cuts, because that's what usually happens, right? We sell off right after the rate cuts. Then maybe we come down to these levels for the last and final opportunity to buy before we go nuclear. But as far as this week, I just don't see, at least not this one. Maybe this one, but I don't see this one getting closed this week. A lot of time for contract rollovers, like I said in my last top-down analysis, we just continue to rally. We just keep going higher and higher because the other contract is probably trading higher anyway. Everybody starts rolling over to the new contract, and it's very, very rare, right, that you get the market coming into the new contract trading lower. It's very rare. So I'll just say that. But let's drop down to the 4-hour, and I'll break down my levels on the S&P 500. And then we can move on to the NASDAQ. So bringing out my top-down analysis, again, for entertainment purposes only, hypothesis. They usually work out, though. I'm not going to say that they don't work out. They definitely be working out. So if we go down to the weekly or the 4-hour time frame, again, if we want to be bearish, we want to see the market trade up first. Well, there's up level, we have this inefficiency right here. When I say levels, I'm talking about inefficiencies or liquidity, right? That's what I'm looking to bounce off of. So we have this inefficiency here. I look for the market to tap back into the chessboard high at 60.15, right? Leaving this open for later on in the week. Monthly settlements right there, 60.15. See us trade down about 4%, breaking through the previous day low, in-wall and 4-hour support, pushing us right down near the monthly fib, which is very, very similar to the Dow Jones. And then we push down to about 57.72. Now, this 4-hour support right here will be key, 58.44 through 58.06. So if you could mark that on your chart, because it will be key. I don't think price is just going to melt through it, right? Maybe we come down here, retest the in-wall, and then sweep all the way back down to the previous in-wall. So from the daily fib, if we trade up, meaning we just basically gap down from the daily fib, we trade up and then drop straight down, I'll be looking for about 4.1%, which is the guaranteed, I wouldn't say guaranteed buy, but I can tell you right now, I'm definitely looking for buys if we come back down to May 11th in-wall. So the daily fib level from 59.86, pushing us back 4.01% at 57.47. Again, my bearish thesis is still leaning toward the bullish side because we're overall in a range. The market brought a new high. It's probably going to sweep this low and then go higher. That's just my thesis, okay? To the bullish case, if we go bullish from here, like we just say, screw it, we don't need to go lower. Again, contract rollover can do that. Trade down first into the in-wall beneath us at 59.12 right here. We push back up 4.06%, taking out this 4-hour supply. And I believe maybe taking us to all-time highs. Yeah, all-time highs at 61.52. Again, continuing that short squeeze thesis from my last video. Previous day low tap. We come back down to the previous day low, which is basically the consequent encroachment of this candle at 10 o'clock. We tap into the previous day low, maybe even sweep it at 59.27. Again, basically the same area. And then we rallied 4.05% up to 61.6750, again, placing a new all-time high from this level. Now, because FOMC is like the big catalyst, that's why I'm really calling for all-time highs this week, because we got all of the information leading into the FOMC meeting last week, meaning we got the CPI, we got the PPI. So now the decisions, or at least the talks, right? Even if the Fed rate stays the same, if in that language, in that meeting that they actually had talks of lowering rates, that's still going to make the market very bullish. So those are my thoughts on the S&P 500. Again, entertainment purposes only, but feel free to check me and let me know if I was right, if I was wrong, if you're following the videos. That being said, let's move over to the NASDAQ, and then we'll break down the news and we'll get you guys out of there. All right, so moving over to the NASDAQ. Now, this one is just, it's crazy. NASDAQ is just strong, super strong. You can see the 3-month chart, again, look even stronger than the S&P 500, and that one looked pretty strong. Strong wick from the low end, indicating buyers. Strong body, indicating buyers are winning. And then very, very, very small pullback or wick at the top, indicating more and more support is being formed at these highs. It's not really much to say, but it's bullish, right? All right, moving on to the monthly time frame. Again, low got put in here in April. Higher low got put in May. Looks like we're creating another higher low in June, and we've already placed well above the high on the monthly candle from May in June. Again, let me know where the bearish case is. Email me, put it in the chat. Let me know. I just don't see it. Maybe I'm going crazy. I don't know. All right, moving down to the weekly time frame. Again, holding a nice, strong, beautiful trend all the way up from where the buyers came into the market. The NASDAQ is just on another level when it comes to bullishness. And it's being driven by the fact that Microsoft is at all-time highs. NVIDIA appears to be approaching that level where it could break all-time highs. And Apple is just chilling in the 200s, right? Like, so until the Mag 7 comes down, the NASDAQ is just not going to come down. It's just not going to do it, right? So the weekly time frame, the only bearish thing I see is a doji candle at the top of trend that could indicate sellers are about to come over and really give us a nice little pullback. But even if we pull back, I'm comfortable with pullbacks all the way back into these highs right here, right? So this dealing range right here, right? If I want to pull back, I want to see the market come right into this level right here, right? And hold. That means that we end up taking out or closing this gap right here at 20,218. We close this gap and then we find buyers to go back up. So I would mark out the range from the weekly on March 10th low and the March 24th high. That's the dealing range that I like to see price return back to on the weekly. And like I said, the reason why I would expect it this week is because of how we finished the week with a nice clean doji candle. It could get a straight sell off straight to the downside before going higher. Again, any sell-offs to me are buying opportunities until the market changes its mind, right? That being said, if we talk about the dealing range that we've been talking about for every single instrument, we just put our lines right on that doji candle right here, right? This is a new dealing range that the market created back on the week of the 19th in May. And what did we do since then? Well, since then, we got above the dealing range. We based out at the top of the dealing range, and now we appear to be trying to go higher. And the next level is naturally all-time highs, right? Like, as much as you want to fight it, right? Because I hear people online trying to fight this thesis all day. Look, man, don't try to fight it. It's not our job. Our job is just to be on the right side of price. We're day traders, right? Most of us, swing traders, day traders, prop traders, whatever you are, your job is to be on the right side of price. That's it. And right now, although we seem to be high, the market just continues to grind higher. So I'm just going to continue to ride that grind. Pause. But I'm going to continue to ride the trend, because the trend is your friend, right? No matter how you want to slice it. I know it's a cliche, but the trend is your friend. And when that trend breaks, if and will it does, I'm looking for a break of 21,456. We get a break below 21,456, then we retest 456. Then I'm looking for shorts targeting 21,075, 20,751, and then finally this inefficiency right here. But again, I do not know if we'll close this inefficiency because of contract rollover. I've been in the market long enough to understand what the market does during contract rollover. And a lot of times it just leaves these gaps open, and then the next contract gaps everything up anyway. So the market just doesn't care to close these gaps the final week of the contract. So take it from me or don't. I mean, we'll see. The cards will be on the table. That being said, the daily time frame, weekly time frame, monthly, and 3-month time frame are bullish. just like the other previous instruments. So let's jump down to the 4-hour. Let's see how I'm looking to trade this week. All right. So we go into the 4-hour time frame on the top-down analysis, and we can clearly see, again, if we want to be bulls, we want to see the market trade down first. So what are the areas the market could trade down from? Chessboard low, previous day low, and in-wall. I didn't measure from the in-wall because NASDAQ is just so bullish. I'm just like, man, forget it. We'll measure from here. And then if we come down and retest all this stuff, I'll remeasure on Tuesday. Chessboard low, 4.65%, targeting 22,627. We're looking at 4.65% from 21,621.50. From the previous day low at 21,471, we're looking for 4.65%, all the way up to 22,479. Again, pushing into those all-time highs that everybody inevitably know we're going toward, right? To the downside, again, down to go up, completely comfortable with that. We get a straight gap down. We push through this in-wall. We push down from the chessboard high. I mean, we push up first, going into the weekly fib and the chessboard high, down to the monthly fib. Again, the same level on the Dow Jones, the S&P that I keep calling about is the monthly fib. This level will be important. You need to mark this level, go to the previous month, take 50% of that month, and I guarantee the market is going to come back here on damn near all instruments, okay? 20,761.50 is the monthly fib area where I look to see the market come back to. That's about 4.73% from the previous day low, i.e. we get a gap down straight below the previous day low. We push straight through this in-wall and we come all the way down 4.68%. That level sits at 20,465. If we get to these bearish levels, I'll say it again, I say it on every instrument, but if we get to these bearish levels before Wednesday, it's not bearish, it is bullish, okay? If the market trades up and then it starts to sell down on Wednesday, that's bearish. But if we're down here on Wednesday and you still trying to go short, I'll see you at the top. Just let me know where that stop loss is at. All right, so just be careful going into this week, man. The VIX is the last thing that we'll go over. So let's move right over to the volatility index in regards to charts, and then I'll get you guys over to the news, and then we'll focus on that. So as I was saying before last week, I literally talked about this exact scenario playing out on the volatility index. I said, hey, watch for the VIX to gap up. My last video, if you haven't watched it, it'll be at the end of this video. I literally said, hey, we're looking for a short squeeze. What I'm looking for is on Wednesday or on the 11th or whatever this day was, I'm looking for the VIX to gap up and then come back down and fill this gap. I got half of it right. The VIX did gap up as expected because the VIX was in its contract rollover. It gapped up and I was thinking, okay, we're going to come back and fill this gap. But as soon as we held weekly fib, price action is king. No matter what my thesis is, I flipped it. Okay, now I'm bearish. Why? Because we held the top of the weekly fib, right? Which means we're using the weekly fib as support, and then we're now pushing back to the upside. So what am I seeing now? What I'm seeing now is this level has to hold. If you want us to continue to be bullish, we cannot see the VIX get back above the 23s. The VIX needs to reject inside of the CE of this wick right here, right? We want to see the VIX reject right into this level, and I'll keep this on my chart just so I can see that, right? To start a new bearish trend and then start targeting this gap fill right here. So that's what I'm looking for. I want to see the VIX fail and then continue back to the downside to support my thesis. If we get back above 23, then I want to see the market hold support on the VIX, and then we'll start to targeting these highs up here all the way back to the 24s, 25s, and 26s or whatever it is, right? Notice how you haven't heard one thesis about the war, about protests, because honestly, it's not that I don't care. I'm not insensitive. I just try to focus on things that truly matter in regards to structure. That being said, let's move right over to the news on the week. We can get you started with Sunday. Obviously, there's nothing going on in America. Well, I shouldn't say obviously, because sometimes there are. But Sunday, we don't have anything. Monday, we have Empire State Manufacturing coming in on the day, which means that we don't have any red folder news. Expect a slow grind either up or down on those days, right? Going into Tuesday, we have core retail sales on that day, which is red folder news at 8:30. And we have core retail sales and regular retail sales. I'm pretty sure that's the same thing. Sorry, my son was distracting me because he keeps trying to come in while I'm recording. But it is Father's Day, so I'm going to wrap this up here. So June 17th, we have the core retail sales, like I said, at 7:30. That should move the market. And then the big day, the big dog is coming out to speak on Wednesday at 2 p.m. We got federal funds rate, FOMC economic projections, the statement, and the press conference. We all know that this is the day where the market's going to go ape shit, right? One way or the other, it's going to go crazy, right? And then going into the 19th, Juneteenth, shout out to all my African Americans out there. We finally got us a holiday, right? So we got a bank holiday on Thursday. I still will be trading that day. I'll probably just trade the commodities, depending on what the indices look like. Probably trade gold or oil, which is another industry that I'm really attracted to this week. Going into Friday, not much news, nothing really on the docket other than leading indexes. So again, expect that nice slow grind up for the VIX. I'll be playing my thesis based off what the VIX has done. By that time, we should know the direction of price. That being said, those are my thoughts on the market. I really, really hope you guys are enjoying this series. Again, I will keep it going, whether it's 4 people, 1 person, or 1,000 people that watch these videos. I enjoy doing these for my own journal purposes, but if they're helping you, please leave a comment down below. That being said, my name is T. Hobbs, and again, happy Father's Day to all the fathers out there. This is the Trader Shop. I'll catch you guys on the next one, man. Peace.